Variances are subdivided into material cost variance, there is the labor cost variance, and there is the overheads variance. In overheads variance, we have the variable overhead, and we also have the fixed overhead. Variances may be favorable or unfavorable. Then unfavorable variance is also called the advance. When the actual cost is greater than standard cost, the variance is known as unfavorable or advance. On the other hand, when actual cost is less than the standard cost, the variance is favorable. So when the actual cost is greater than the standard cost, that's unfavorable. When the actual cost is less than standard cost, that's it's variable. Let's start with material cost variance. Material cost variance is the difference between the standard direct material cost of the actual production volume and the actual cost of direct materials. So the to get material cost variance, this is the sum of material price variance in the material usage variance. Let's have an example to calculate material cost variance. In our example, it says the material standard for 1 unit of product Y is 3 kgs at 5 shillings per kg. 14,000 kgs was used at a cost of 84,000 shillings and 4,000 units were produced. Calculate the material cost variance. Let's now calculate after reading our example. First, we have to calculate material price variance, which is given by actual price multiplied by actual quantity minus standard price multiplied by actual quantity. In our example, our actual price and actual quantity, it's 84,000 shillings because we are given cost which is price multiplied by quantity already, that has been multiplied. So our cost is 84,000 shillings minus our standard price is 5 shillings per kg. So that's our standard price. So 5 multiplied by our actual quantity, uh, which is 14,000 kgs. So it's 84,000 minus 5 multiplied by 14,000. So we get 5 multiplied by 14,000, which is 70,000. So it's 84,000 minus 70,000, we get 14,000. Remember, we said when the actual cost is greater than the standard cost, that's unfavorable or adverse. And when the standard cost is greater than the actual cost, that's favorable. So in our first, that is material price variance, the actual cost is 84,000, which is greater than our standard price, our standard cost, which is 70,000. So it will be 14,000 adverse or unfavorable. Let's go to our second one, which is material usage variance. Material usage variance is given by standard price into actual quantity minus standard quantity. So standard price into actual quantity minus standard quantity. So our standard price we had it, which was 5 shillings. So it's 5 into actual quantity is 14,000 kgs. So we have 14,000 kgs. We don't have yet the standard quantity. So standard quantity, you can see as I've done it on the side, that standard quantity is equals to 3 multiplied by 4,000. 3 is the standard quantity that we have, at 5 kgs per kg. So we have 3 kgs multiplied by the total units which were produced 4,000. So we get the standard price, the standard quantity, it's 12,000. So it will be 5 into 14,000 minus the standard quantity which we've gotten, it's 12,000. So we get 5 into 2,000. So 5 multiplied by 2,000, it will be 10,000. Remember, as we've done on the material price variance, that wherever the actual quantity, the actual cost is greater than the standard, we say it's advance. So we have 14,000 which is greater than 12,000, so that automatically it's advance. So we will have 10,000 advance. So now, going back to our example, we are required to calculate the material cost variance, which were required to calculate the material cost variance. So we say material cost variance is equals to material price variance plus material usage variance. So we get 14,000 advance plus 10,000 advance, which we get 24,000 advance. And that's how to calculate material cost variance.